What do you call this kind of market? Nervous market, mixed market, jittery market, 20-point moves in the S&Ps on a whim. Some other moves, we know what the catalyst is. But we're going to get back to normal as much as we can today. We're going to talk about the refinery fire at Valero last night that affected the markets. We're going to talk about private credit, maybe do a private credit list for you for stocks to keep an eye on. They've certainly been in the news. What I'm looking forward to is Craig Johnson at 8:35, managing director over there at Piper Jaffray. For those of you who remember, he started out the year cautious. See if he's still cautious on the markets and get his technical thoughts. We got a full crew here on pre-market prep, and we're fired up to give you the news and the action. Let's get it started.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Down 8 handles, no big deal. 66.27. We've been higher, we've been lower, we've been chopping around. The buck is up here, 37 cents. You have the TLT down 38 cents at 86. That's almost the low of the move. USO bouncing back after a volatile day yesterday, up nearly $3 and went 13.49. GLD, I wish they would stop with the 8 o'clock prints because I can hardly. Right now, I have GLD down a couple bucks. Now it's up a buck, so not sure what's going on there. SLV is flat. That's the way it's trading. Bitcoin, good old tame Bitcoin. It's up $575 at 71,310. It's not really a turnaround Tuesday, but it's Tuesday here in the markets. We're going to bring in our chief strategist, Triple D. How you doing today?
Motion sickness is what this market is. We have been so choppy this after hours session. I want you to just bring up the S&P chart here just to look at it, Joel, because it has been up, down all over the place. Overnight session. Again, we're just looking to try to grab on the left side of the chart. We're looking at.
I'm trying to make it bigger.
What that big pop is. I don't know what that is. It's not right.
This is from yesterday.
What's that big green pop? I don't. Oh, this is
all
yesterday.
Morning.
No. I just want to see this morning. So like the overnight action. So maybe we can make it. Doesn't matter.
I'll make it 5 minutes.
Yeah, do that. So that's better. So grabbing from day yesterday too. We have the pre-market action on there.
Yeah, it's the S&Ps, man. Maybe it's more tame than you think. This has been the action.
It is not. It just doesn't look that, but it's been choppy as hell. So I can recap it in my head. I don't need a chart because I don't even use charts. So basically, after hours, I'm here all night. So at 4 o'clock, we started popping off. We were up most of the after-hour session. So I would say from 4 to 8, it was kind of tame. But then at 7:45, we start hearing rumors of something on fire. Then we get more clarity 8 o'clock. It's a refinery in Texas, the Valero refinery. Then they start tanking the S&P futures because everybody's thinking the worst thing. Oh my goodness, Iran's
explosions.
In the US. Explosions at a refinery was the headline there. So that's when the S&P futures sold off substantially there. You won't. You will see it on the S&P futures at 8 o'clock. So yeah. You know what's confusing here is you just got too many days here. This is the problem, Joe. This is not. Like March 24th is right there. So you're literally showing like 10 days of charts. That's why I'm like, what is that? So, well, if you have Joel figure out his charts a little bit better here, but you're showing 10 days of charts.
You don't like I can't figure out that action. 5 minute. I mean,
I wanted to see the intraday chart. It's called like the 24-hour chart.
Like this is where the day started right 24
here. Hours. TradeStation has it. We just got to figure out how to use it. We have a meeting today. We're going to put this on the meeting. The first thing, show me how to show 1 day of chart, not 10 days of chart. Because I was like trying to figure it out. I'm like, I don't see any of that there. But, you're not seeing the chop because we're seeing back to March 17th. So a lot of days there. But, then we sold off substantially on the Valero fire. And, we went down like 50 handles on that. Then it came out that it was not a terrorist attack. It was mechanical. So being mechanical then they're like, okay, well, this isn't that bad. And that's when we've come back here. So we've been all over the place in the overnight session, up and down, moving 10 handles at a time. So it's been really, really wild. Joel's still upset about his chart.
So what, like, obviously this is the market showing us its pretty nervous hand here. I mean, if this is, I mean, in a time like this, of course, minds are going to jump to the conclusion that it was some kind of attack or something like that. But I mean, like, what else with this? I mean, how can we use this here today? How
well,
can
we're
we
nervous.
Yeah.
It's a nervous market. It also is somewhat disappointing, I will say, that the S&P faded most of the Trump put move yesterday. I came out and saying I thought the market would hold up. It did hold half the gains, but I didn't think we were going to give it back because I thought even though if Iran hasn't talked, if there hasn't been talks, if the administration is lying to us, it doesn't matter because it's telling us that Trump wants to make a deal. The Trump put is below. If the markets fall enough, Trump will do everything in his power to get the markets to come back up, and he will be more pressured to make a deal. That, we're still fading back into that, though. So now, we're not. Last night we got down here at 650 on SPY. I mean, we're coming back in, and there's still this market here that wants to go down. So we have a Trump put below, but there are nervous Nellies out here that continue to sell. I'm still fairly fully invested because I think eventually we do get a deal, and I think the S&P future is going to pop 200 handles in about 20 seconds when we actually get a deal. But this market's nervous.
Joel, any thoughts on this sentiment?
Back at Phil a little bit, right? I mean, we got really overdone on the this was the rally that you had yesterday in the pre-market, and it tried to hold up during the day. One thing, you like to look at is, after big moves and stuff, periods of consolidation. And we're not, maybe this is the start of it. Yesterday kind of held in there during the day. It wasn't a super crazy intraday range. Maybe we'll get a little bit of stability. Of course, it's always, it's just dependent on the headlines, right? we know that. Yeah. It's very evident that, it's a headline driven market until otherwise notified.
Well, it's going to continue to be a headline driven market, but it's, it's the one thing about this market is we were already a little bit nervous before the war even started because we didn't know where AI was taking us. There's a lot of uncertainty in this market all over the place here. So it's not like the war is over and everything is just grand again. We still have uncertainty with AI, where AI is taking us with jobs. Now, I've argued with Citrini that the efficiency trade of AI could actually bring us back to all-time highs. I think that's still in the cards. We got to lose this war first. So we had a lot of productive, knowing that the Trump put is there, knowing that Trump wants to make a deal, knowing that he wants to figure out a way to get out of this. That's all positives for the market. But the leak here, the continued leak, the nervousness we saw last night, with the Valero, refinery fire here, just shows that this market sells first and asks questions later. Where before, when for years, it seems like we're always buy first, ask questions later. So the narrative has changed.
Two things we've been mentioning here that traders have been having to deal with the last good month or two or three. The other one that we've been talking a bunch about, but kind of the less talked about one, is private credit market and fears going around there. And we did get an update on in that way today, or actually I think it was maybe late last night. Apollo's $15 billion private credit fund received withdrawal requests equal to about 11% of the total shares. They have a quarterly cap. They can only withdraw 5% of funds each quarter. So this was double the quarterly cap. So certainly these private credit concerns are not going away. And are they getting worse? Yeah, I kind of think so. I'll let you guys comment, and then we can go to a little bit of a watch list we'd like to get on everyone's radar for the private credit, some of the private credit names.
Yeah, I mean, Apollo's come from $150 to start the year down to $100 and $107. If you're invested in there with private credit, you're nervous. You're nervous about how your money is. You can't get it out right away. I mean, if you own the stock, you can get out right away. But the people who are actually invested, with these firms, there's a lot of private lending and stuff in there, and they've got the cap. So now all of a sudden you can't certain people can't get their money out. That makes more people nervous. So Apollo is trading down $3 on this headline. The other two are KKR, which is a similar disaster. Started the year at 135 bucks, is down here at 90. And then you've also got BX, which we've talked Blackstone as well. Started the year at 160 bucks, down at 109. These stocks have been disasters. These problems started before the war. So there is, like, when you lift up the hood, this market's got problems. So, it's not like green light go, but, if we could lose the war, maybe some of these problems start to go in the back burner here. But this definitely is a market that is nervous, not only with war stocks, not only about the war, it's nervous about a lot of things. And you have people trying to pull their money out of companies like Apollo. 11% redemptions is significant here. Like, this isn't like steady as she goes. That's telling you there's a lot of people nervous. I would imagine their redemptions are probably 1 or 2%. I don't know what they are on average. We could probably go find that. When they got a 5% cap, it's not very often we hear, oh, they've exceeded the cap. So, this is an issue for these companies, and it's an issue for the financials.
Joel, was there anything sticking out there?
This is a check back
for
Apollo. Check back, right? Well, first of all, mentioning that at the beginning of the year, I mean, this peaked right at the beginning of the year in January. It's been a steady leak, and the acceleration has picked up. I don't know when AI is taking over private credit in lending and this and whatnot. But if you felt you missed the move in this, you did go to 100, as Dennis mentioned. You just hit 115, and you're coming back halfway here. So if you're going to shrug this off, you thought that was a major low under triple digits or under 100. Then here's your check back. No daily lows in that area to coincide, but you probably look similar on some of the other charts. But big decline, a rally, and a check back.
Dennis mentioned the 3 private credit companies that we've been mostly discussing: Apollo, Blackstone, KKR. There are a handful of others: Ares Management, ARES, also OWL, OWL, Carlisle, CG, Hamilton Lane is HLNE, Stepstone, STEP, and also TPG. How I did this
Ares
morning,
has been a mess too, ARES. So, these are companies that people, 5.32% dividend. They're in there for the dividend. They're in there, obviously, for a slow stock appreciation here too. These are significant sell-offs. This is not like just run of the mill here. I mean, it's given back half of its last 4 years of gains. So there are concerns here. And I mean, really, when we go to the financials themselves, XLF, it hasn't been great. It hasn't been a great place to be. So, is this all private credit? The banks, even the bank charts themselves. Bank of America, not great. JP Morgan, not great. Like, a lot of these stocks are just looking tired to me too. And maybe they've just had too big of moves, but maybe they're worried about, AI in this business as well. I've argued before that AI could disrupt wealth management. I think it can. I think a lot of these companies that, obviously manage wealth. And I think those businesses themselves probably could get disrupted. Are we going to need banks in the future? Absolutely. Are we going to need lending in the future? Absolutely. Those things don't go away. But some of these banks have serious wealth management businesses here. That is ripe for disruption from AI. And once the war ends, we're going to go right back to the AI disruption trade. There's going to be AI efficiency, which is going to be good for, companies. Obviously, XYZ cutting some staff. Meta's rumored to cut some staff, although did not. And that's maybe why the stock leaked the gains back. But we know that the market wants to see less, jobs and more efficiency, and they're going to reward the stocks for that. I think we're going to see more of that in the second half. So I do think we'll flip from a war story back to AI disruption story here. So it's not like the market gets completely out of the woods once the war is gone.
But what story's not gonna go away?
What's that?
We're not getting lower rates.
Well, I think we do.
I think we,
it's
a good point, Joel.
Go ahead, I'm
Dennis.
of the opinion the second half of this year, when you start seeing jobs have problems, and we actually probably do get the new Fed chair, although, there's rumors that, Powell might just stay on here, that they're not going to, allow it. There's lots going on there with the Fed. A lot of uncertainty with the Fed too. I mean, uncertainty with the war, uncertainty with AI, and uncertainty with the Fed and interest rates. I mean, that's a very uncertain environment.
Then how can you
So
remain
you
bullish?
can't argue with stocks wanting to be down 5% from the highs. It's actually absolutely absurd on the S&P that we're only 5% off the highs. With this much uncertainty out there, the S&P has been unbelievably resilient. Unbelievable. And for the people who have said, oh, the S&P not diversified enough, it's just, mega cap. Well, the Meg 7 is all off more than 5%. So I'll tell you, the S&P is doing its job. It's more diversified than we give it credit for.
We still haven't seen the fall through in the inflation, right, from these rise in oil prices. We know last month's data was hot, regardless, even though we did have the didn't have oil prices in there. So, what were we talking about? 3 rate cuts this year, or 4 rate cuts here? What was it?
2 or 3.
We're talking about potential hikes. The war changed everything. So totally dead. You got oil going from where we were 80 to 120 or whatever. I mean, that changed everything. So we could say, yeah, my TLT call was bad. And people, I get that message every day how bad of a call that was. I mean, it's down 3%, but it was a really, really bad call. It wasn't a good call. I also didn't know it was going to war start the next week. So that changed everything. Not defending the call, but you know what? I actually did better by moving to TLT because I'm only down 3% on that money. And when you look at the stocks that were in my acronym, like Baidu, are way farther down. And you just go through, RKT, which I sold at $20 because I was moving to TLT, is down to 14. So even though I'm down 3% on TLT, I saved myself 30% on RKT.
Definitely.
Boy, that is putting a positive spin on it, man.
Well, it's not even a positive spin. It's math. I
agree.
Being in bonds has been a hell of a lot better than being in stocks in the last month. That's the bottom line. Because you can complain about TLT being down 3%. And yeah, it sucks. But you know what sucks more? Being in stocks that fall 25% like Rocket.
Totally.
That's what sucks more.
Jules,
so I wish I would move more to bonds, more of my equities to bonds, and I wouldn't be down, 12% of my long-term portfolio here. But, I've got the barbell going. I got AI stocks. I got a lot of Meg 7. I've got a lot of AI stuff going. That stuff's been hammered too. It has been a pretty ugly market here, despite SPY holding up very well.
The thing that I will say on the Fed rate cycle is that, like, the Fed fund futures are very fluid. This is far from a foregone conclusion. Just because the Fed fund futures are showing that we are unlikely to get a rate cut in this environment throughout the year, that's going to change in a snap when we have some resolution soon in the Middle East. I think that the odds are going to go back to at least 1 rate cut this year. And I think, Dennis, to your point, I think we are going to have to start accounting for job losses, and that's going to be
I think
it's
going to be a story for the second half, and I was too early on it for sure. But I think it's going to be a story later this year where we start talking about job losses, and then they start saying, if you start seeing massive job losses, don't kid yourself. That Fed outlook for interest rates will be, because there's 2 concerns that the Fed mainly has, is inflation and jobs. Well, right now, jobs are fairly stable, although there hasn't been new creation. Powell even said about that. He's kind of disappointed there hasn't been a lot of new creation. There's not going to be a lot of new creation. There's going to be decreation. That's not a word, but I just made it up. AI is going to take away jobs. Bottom line, the Fed is going to have to deal with that problem later this year and into next year. That is, my friends, is why I think interest rates are going to come down substantially later this year into next year. So we can say, oh yeah, Fed may actually raise rates. They're not going to raise rates. The jobs haven't been good enough here. Unless we start seeing inflation other than oil start to skyrocket here, I highly doubt we're going to see any interest rate hikes. That is just market media spooking everyone. Yeah. So I think we're going to actually see next year, later this year. I don't know the timing, but all I can say is I firmly believe with my soul that AI is going to take away more jobs than it creates. And that is going to be a problem that the Fed is going to have to deal with.
Let's move to a little corporate news here. Estee Lauder down substantially. Just before the close yesterday, there was a report. I believe it was a Bloomberg report, maybe Financial Times. Estee Lauder near a deal to combine with Jean-Paul Gaultier's Puig. I don't know how to pronounce that company. Chat,
Yeah, I
help
don't
me
either.
out. Stock. What?
Wait, wasn't he a baseball player?
All right, that was funny, Joel. Sorry. Stock fell like $10 on that news as market is considering that this company might have to give up a bunch of cash, assuming that's why the stock fell. Company did confirm after the close yesterday. They said, yes, we have had talks, confirms that it is in discussions relating to a potential business combination. The two companies could potentially merge. No final decision has been made and no agreement has been reached. What do you guys think about this? Can you imagine in this environment a company spending a few $1 billion to combine with another company? It just sounds unattractive.
That's why they hammered Estee Lauder. So
Oh,
this
they
rumor
hate
came out yesterday around 340, 337, and the stock was trading at 90, and then it closed at $79.29. They smacked it down 15% in 15 minutes. And that's because they're saying, holy crap, this is not the environment to go be a hero and go be spending big time money on picking up another company.
Exactly.
Here. This is just, not well timed, not well thought through. The market is selling first and asking questions later. Again, that's the market that we're in. It sells first and asks questions later. And even when it buys, it's tepid buying, where it's not a lot of follow through afterwards here. So you are in a bear market here, folks, despite the S&Ps, sitting up here, down 5%. All the people who really follow all their textbooks are going to say, Dennis doesn't even know what he's talking about. A bear market doesn't occur until the stocks are down 20%. You want to know something? If you're selling your stock, you're getting worried about bear markets after the market's already fallen 20%, and you're worried about hedging after your market's already falling 20%, you're doing it backwards. We've been in a bear market for a better part of this entire year. There are lots of stocks down 30, 40%. I don't care about the 20% rule. That is the stupidest. Whoever came up with that is stupid. Whoever came up with the stocks are not in a bear market until they're down 20% is stupid. It's simplistic thinking for people who want to think simply, like this, just thinking easy. No, it's a bit of a bear market for a long time. How do you know? All of those other tells where all RIFs are being sold, stocks, can't hold gains, great earnings reports are sold. Those are what tells you you're in a bear market here. Can that change? Absolutely. We can get back to a bull market here again. The war might change all of that. But right now, bears remain in complete control.
Boy, I'll tell you, someone's going to be taking some heat at Estee Lauder here. I mean, look, just this environment to be doing a deal like this. I mean, don't they follow Netflix stock? I mean, the market, this is not the environment. I mean, if you're looking for a reason for or you want your stock to go down, announce a large acquisition in a volatile, a bear, whatever what market you use, and then just go to the Netflix. Okay, well, we didn't get the deal. Well, is it getting back all those losses before? Would have been in the bear market before. I think this is
sure.
I hope no one from Estee Lauder is listening, but this has to be one of the worst corporate moves that I can think of. And
it's just a rumor right now. So
yeah.
and Estee Lauder didn't deny it though. They said there's stuff going on here. It's just not well timed. Maybe it's going to work out in the long run. You still have to think about long run versus short run. I mean, on this show, we're speaking to traders so much. We're short term centric here. So maybe it's short term pain for long term gain for Estee Lauder. You hope management should always be thinking longer term. If they're thinking about the short term, that's not prudent either. So I can't say this is a bad deal for management. I don't know how it's going to work. But right now we can tell you this is not the time for it, and that's why they're punishing the stock. Maybe it'll work itself out. Maybe they'll get a good deal. Maybe, there won't be any deal. Maybe they see the stock reaction yesterday. Don't kid yourself. Management sees reactions to rumors. I firmly think this too, that sometimes management floats these rumors out there to see how the stock responds.
That happens for sure. That happens.
They're getting an opinion of their shareholders. The opinion yesterday was hell no. So does that change things? Possibly.
I think so. Yeah.
I think so too.
I want to just give a real quick heads up. We are going to have an ARM event today. It's not exactly, I guess it's probably a conference. They're calling it the ARM Everywhere event. It starts at 1 p.m. Eastern time. It goes to about 7 p.m. Eastern time. CEO is presenting, ARM CEO is presenting at 1 p.m. So just a real quick little heads up on this one. We can take a quick second on the chart, Joel, if anything sticks out. If not, we can just keep rolling.
You're coming back to an interesting level here. No doubt. You hit 140 a couple days ago. I mean, this chart does it. I mean, it's obviously fallen off since October, but you're grappling with this 140 area. You filled a little gap here back from December. You're trying to get back, above the 200-day moving average. That's a big level. So see if it can push through there. But of course, it's had its haircut, had its rebound. See what happens today with the ARM. I mean, they're going to be presenting other companies. I mean, right? I mean, they're going to be
It's like
talking
their own thing.
Their own thing. Okay.
Yeah. I'm not sure if that's what you meant, but
the catalyst for the
yep.
event. You know what our catalyst rule is? It's you have the event. I don't think we had really talked about this one much, but run up. I mean, that's a nice run up the event. I mean,
sure.
Look at the way this thing is done just in March, and we know this has been a different market. So be careful on this one, folks. Let's see if the catalyst can keep this going.
Triple D, were you gonna?
The one thing we know is that we are going to have continued shops. So we can talk sick for forever. We can talk, about all these individual headlines. We can talk about ratings. We can talk, corporate news. We can talk all this stuff. But what we absolutely see in this market is just fading moves is the way to go. We're stuck in the mud, not really going anywhere. I mean, if you're coming in there and just blindly shorting the Trump pop yesterday, you got rewarded. If you're blindly buying dips like the day before, a Trump put comes in and gives you big money. So where the money is being made right now from a trading perspective is fading every single thing. Contrarians dream market. Momentum traders hate it. Contrarian traders are killing it right now. I'm telling you, they're killing it. And all a contrarian trade, so if you don't know, momentum and contrarian. Those are the two core strategies to everything. Right now, every move seems to be faded. Even individual, like 20 points up, 20 points down, 20 points up, 20 points down. That's what we've kind of been doing overnight. That's all tradable. So if you're just flat out buying dips and selling rips and shorting rips and buying dips, your P&L is just continuously climbing. If you're sitting here trying to position yourself to okay, here's where we're going to start really going higher here, you're really getting nowhere. If not, you're leaking a little bit too, depending on the stocks that you're in. So you've got to adjust your trading in these environments here. It's not about, we're up 20 handles, I better go buy now. No, it's backwards. You got to be selling when you're seeing the rips, and you got to be buying when you're the dips. Even since this show has started, we had money up, and then we sold off a bit. Now we just rallied 10 points back. Like we're moving, it seems like 10 points at a time. They're big moves here. So these are all tradable moves. So love the chart. That's a better chart.
I was just going to say.
Go fix the chart. But look at how many crazy moves. That was the move I was talking about last night with the refiner. Now I see it. That was a crazy move. So you can see how nervous it is. Right at 7:45 or 8 o'clock, we start selling off. Joel pointed out. And then the steep sell-off, we lost 50 handles because we thought it might be a terrorist attack. Then they said it was mechanical. We rally the whole thing back. Then we sell off again. I mean, this is a choppy market, man. Buying dips, selling rips, killing it.
Okay, and just a quick note here. These charts are brought to you by TradeStation. Trade smarter, move faster, stay in control with the platform built for serious traders, and to just keep an eye on the mark here in most of your stocks. But we are chopping around Chop Fest. What do we name the show? Should we?
Motion sickness.
Motion sickness is a fabulous name for it. Michael Fian came up with that. That's a fabulous name because I feel motion sickness trading this market sometimes too. It's like, oh yeah, here we go, and then we're going the other way. Oh no, we're coming back in. Oh no, we're going the other way. Yeah, traders are getting motion sickness. That's okay.
Joel, pull up the chart for AAOI.
AAOI.
Applied optoelectronics. Bit of a fade to your point, Dennis. A bit of a fade here. Not the craziest fade or anything, but a bit of a fade here on news out last night. AAOI announces a new order related to their 800G data center transceivers. This was, as far as I could tell, the second customer that they've announced for this transceiver product. And y'all know that I'm going to say this, but when you have a contract or a piece of M&A, you want to look for terms, a monetary value if you can, because it means that the news, the contract or the M&A is material to the company. If it's not material, then they are not required to disclose it. So in the case here of AAOI, they say this initial 800 volume order totals more than $53 million. Stock got, stock got about a $4-5 pop right after this news hit last night, and a bit of a fade here, fade a good $1 or so since that news this morning.
Went to a really good area for you AAOI traders here. You have a couple highs over, actually you have 3 highs over the last 6-7 sessions at the century mark. You can see it did pop over $100 once again, coming short of that area. But after a significant decline like this, you know, if you find people are like, okay, I can't get out at 120. Well, I don't think I can wiggle out at 110. Well, I'm going to try and wiggle out over $100. So keep an eye if it goes. I mean, that's still $2.50 away. The first time it was quickly faded. Let's see if it can get back there again.
We do
All right.
have.
Do we have our guest in the background here to talk?
Yeah, and he looks
technicals
ready.
And fundamentals, folks. We are going to be joined by Craig Johnson, Chief Market Technician at Piper Sandler. Johnson, how you doing today?
I'm doing well. Can you guys hear me okay?
We can hear you. We can see you. We can see downtown Minneapolis, baby.
I do traffic on the 9s for people too. So
yeah,
nice.
Yeah, weather on the 8s and traffic on the 9s.
Exactly.
So, Craig, if my memory serves me correctly, which it does about 82% of the time, when we had you on, you were cautious.
Right.
Are you more cautious, less cautious? Tell us how your scenario analysis is playing out.
What I like to say to people is I'm bullish, but with a lowercase b, right? This is a market that I do not think is going to be more than sort of a single-digit return for 2026. And history would show that in these midterm election years, that your average return for a market is in single digits. And now we have what's going on in the Middle East with Iran, the U.S., Strait of Hormuz. That sort of even makes it even more likely that we're only going to get a single-digit return for the year, sort of at best case. And I think a lot of that is going to be sort of back-end loaded post the midterm elections. So the summer months coming up are probably going to be something you're going to want to trade more to the downside than the upside from my perspective looking at markets. And if you look at a chart, if you pull up, Joel, a chart of the S&P 500, I think Trump is probably a day trader, right? Okay. And
I think Barron is. Barron's probably the best day trader on the planet.
Yeah, he might have been the guy that bought all the oil 15 minutes before the.
Who did that? That's what we want to know. Is who's that person? If they ever,
Barron, who knows? Could have been Nancy Pelosi. We don't know.
Maybe
at this point in time. But I guess what I would say, when you look at a very simple 14-period RSI on some of these charts, we were at very close to very oversold conditions. Trump's tweet came out at an appropriate time to sort of shake off the shorts to a degree. And yesterday's price action is a little troubling. We get this big gap up. We then try to break through the 200-day moving average, but couldn't reverse the 200-day, capture that again and get back above a 10-period moving average. And we couldn't reverse the downtrend that started here. I mean, you have to look at this market as a relief rally and probably nothing more at this point in time. I think it's dangerous to say, oh, this is done and over. There's a lot of factors that come into play here. And I know hope springs eternal with people. But at this point in time, you got to view the S&P 500, price action, the Dow, even the NASDAQ as just a relief rally. And how am I playing this is the common question I get from people.
Yeah.
I'm playing it just like 2003, guys. You buy energy and you buy optical stocks. Those were the two big winners back then. And I upgraded energy to an overweight back in the end of February because the charts were telling me to do that. I didn't know anything that we were going to have a conflict with Iran or any of those kind of things. The charts were all turning higher. And guess what? Watching the price action you saw yesterday, well, sort of validates why we should all look at charts, because we don't know. And it told us that we should be buying things. And then the reason I'm buying the optical stocks, Dennis, you probably remember this. Joel for sure does.
Yeah.
There was a little company years ago by the name of US Robotics. You couldn't manufacture enough chipsets to make the dial-up modems so people could connect to this new technology called the internet, right? And I think NVIDIA, to a degree, is the same kind of setup as what you got. You can't make enough of these, video graphic cards at this point in time for AI and everything else. But the bottleneck is soon going to be what it was back in the late 1990s, which was the communication networks, the interconnects between these things. And there's only really one way to de-bottleneck that, and that's going to be with optical. It also means that you're going to have a huge upgrade cycle that is going to have to take place not only at the data center level, at the corporate level, and also at everybody's homes. You got to move off of Wi-Fi 5 or 6. You got to go to 7. The data centers need optical interconnects between them to run more of these AI agents. And even if you're running cabling at home, I'd run something bigger than Cat 6. I'd run Cat 8 just to future-proof yourself for the future. And then you also saw the news announcement today that the U.S. government is banning networking equipment for manufacturers really outside of the U.S. because it's too big of a risk. Agreed. There's really one other company to buy, is a little company, if you pull it up on the screen, called Ubiquiti, ticker UI. They're a U.S. company.
Yeah.
And it's a great little networking company, and you can see the price action on this. But they do a great job of making power over Ethernet. They make a great job of making switches. Interesting point in time on the chart there, in your daily chart, that you want to break out to a new high there.
Unbelievable in this market, Craig. I mean, when you see stocks that are making new 52-week highs in this tape, that is showing unbelievable strength, because this has been an ugly tape overall. For most stocks, this has been not a good market. When you see a stock, you like relative strength. I mean, this UI, it was like I've been watching it even overnight sessions. Like this UI, man, this thing seems to go up every night. And I'm like, I don't know much about the company, so I appreciate, you bringing it to our attention this morning. But I see it in my filters because I'm watching price all the time. I see it in my scanners every night. This UI seems to just want to go higher. So, breaking out in this market, that's impressive.
It is. And you know what you call that, Dennis? You call it leadership. And we're all looking to trade the leadership in the market. And I think these optical companies are going to be leadership. Here's another one to bring up on the optical side. A lot of people don't realize this, but they bought a company about a year and change ago on the optical side, put in Nokia, an old flashback from the past. But they bought this, I believe it's Infineon Networks, but it's all optical. And this is a stock from here on this pullback is, to me, an interesting opportunity. And you can see on your 15-minute chart there how you made that higher low. And again, I like the setup, what you're seeing here, for not only the short term, intermediate term, and longer term setup for these guys. Could be really interesting play, because there's going to have to be a lot of upgrades that are going to have to take place. And it's not going to be done in one day. It's going to take multiple years. And if you start reading some of the, if you want to read some of the fundamentals on Sienna or on AAOI or a bunch of these names, this is the next stage of what we're going to do with AI, is going to be these optical interconnects and communication internets. By the way, guys, I added not only Sienna into our model portfolio recently, but I also added AAOI. This is at the end of end of February. I added them into the model portfolio. And I also added, I have Corning in there as another. And there's another little company, VICR,
I like these.
is another one on the optical side that I've added into our portfolio that we run here at Piper Sandler. So I've made a big commitment to optical because I do believe it is going to be the next stage of AI.
What about the best name here? Optical Cable Corp.
I don't know where you dug that one out from, Joel.
You know what? It's a long story, but this has been around forever.
Yeah.
But obviously, they're not performing like the others.
Not bad though. It's kind of moving up here too. So I don't know. I don't know this name. I don't know if Craig, if you know this name either, but it's actually been moving up here too over the course of the last few months. It's got a good name. Sometimes it all takes the name in this market. Optical, right there in the name.
Yeah, Optical Cable Corp.
Craig says, "I don't look this sucker up."
Yeah, I mean, when I go back and I look at a weekly chart, it's a pretty choppy chart. You could buy that, or you could buy. You could also come back and think about, Corning is another one that you can go back and buy too.
Oh, yep.
And that one has definitely been performing quite well on this pullback in here. It's probably an opportunity for people.
Craig, let's just talk overall. And I've been arguing for hardware over software here for a while. And obviously, the markets have, been rewarding, optical, Corning. You're talking hardware here too. I mean, can we just do it as simply in saying that, it appears that AI may disrupt software, but it's a long ways away from disrupting hardware if it ever does. And in order to run AI, you're going to need more hardware. So, I mean, is it that simple to just take your tech stock and say, is this a hardware company or is this a software company? I'd rather own hardware than software. Is it that simple or is it more complicated than that?
I would actually add a slight other category into it. So I would add into it, not only are we talking about hardware, software, I would talk about communication, sort of break that out as separate. Okay, because I think that is important, because when you talk hardware, I also think about memory companies and storage companies and those other companies like Western Digital, SanDisk, and some of the others. And you don't want to forget about Micron out here either. But if you want your single step way to play sort of your hardware from that perspective, just buy Taiwan Semiconductor, right? That would be your ultimate play. I suspect you'll get a good opportunity to be buying that in coming weeks, though. Right now, this stock has been pulling back on your daily chart. Why? Because Taiwan primarily runs on LNG. And that LNG comes from, well, most of it comes out of the Strait, has to go through the Strait of Hormuz. Yeah. And they get 15 days supply. Well, this is a challenge. So for entire Taiwan Semiconductor and all the chips that are getting manufactured. So that's something people are going to have to be aware of from a big picture perspective to pay attention to. But pullbacks in that I want to buy because they're creating the chips for everybody. And we already talked about the optical side of it in software. We're not going to have all these AI agents and agentic coding and everything else sort of wipe everybody out at this point in time. We are going to need fewer seats. It is getting harder for college graduates that were the data scientists to find jobs at this point in time. And I think that trend is probably going to continue for a while. Simplistically, because old people like me, age shaming my own self, can go out and use AI to write all the kind of software that I want to go write and build my workflow and process through Python and AI. It's pretty simple. Changes the world. I need fewer interns or fewer associates to help.
Yeah. I mean, have you started playing around? Do you have anybody playing around with the open claw? Obviously, we had Jensen Wong talking about the Nemo claws, and like we've been playing around with it a little bit too. And it's exciting. Like, I mean, it's exciting for a non-coder to be able to like tell it to do something and it sits here and codes it for. It's like I'm in a whole new world here. So.
I get calls from IT like, why is it's 3:00 in the morning. Why are your computers running on all these different things? And I'm like, well, I built all these processes and screens and things that I want to see that when I walk into the office at 5:30 in the morning that are sitting there already ready for me to go. So I run these things on schedulers in the middle of the night to do everything. Like, that's the kind of stuff we want. Bring me the information instead of me wasting my time pulling it all together. Have the computers do it for me. Build your own workflow.
Yeah.
But other stocks we got to talk about, guys, right?
Go.
Like I also upgraded energy at the end of February, right?
Well,
So
I like Craig. Hardware and energy. That's my two favorite sectors too. Let's talk
Correct.
energy.
And if you look at like Chevron Texaco, and if you look at the price action from yesterday, right?
Yeah.
Initially, when the tweets were heard around the world from what Trump had to say, we saw energy stocks get sold off. But the dip buyers came in and started buying these guys later on in the day. So if you look at Chevron, you look at Schlumberger, LBRT, a lot of these kind of names. And then other things that we've been calling out too, also look at Viper too. You know, a lot of these other energy companies, there's a lot of opportunities. Even Schlumberger is a name that I'm going to be out there looking at too.
What's amazing is that, you know, oil was down at one point in time almost 9 or 10% yesterday. And then in the afternoon, these oil stocks went higher. I don't think I've ever seen that in my entire trading career where I see oil trading down. I think it was down 8% of the time. And the XLE trying to go positive. That is just incredible. You know, what they're selling is down 8%, and bang, you know, you see these stocks all, you know, making new highs. Chevron making a new 52-week high yesterday in that tape. That is nothing short of incredible.
Well, it sort of tells you, right? The playbook from 2003 Gulf War, we were at the same sort of spot in terms of communication networks.
Yeah.
We were at sort of the same spot. When there is some sort of finality to what's happening with Iran and the conflicts, this will be a risk-on environment in a very big way. It'll be a very big beta trade that'll take place, and you will want to take money out of energy. But right now, we don't know if that's today or 2 months from now. We hope it's not 2 months from now. If it's 2 months from now, the global economy is going to have an issue, and there's no reason to be long equities if that's going to be the case. But right now, your best sort of balance trade is buy the leadership, which is optical, storage, and those kind of names, and then energy, because we don't know when it's going to end. That's a strategy we've been doing. Our energy holdings up for the portfolio we run are up 27.66% year to date. Our tech stocks are up 19% year to date. The entire portfolio of stocks we run is up 2.2% year to date. So we've sort of, I think, got a nice risk and balance sort of going on between these two in the environment that we're in.
Craig,
again,
before we let you go, I gotta go. So go back to your original statement, as far as, you know, where, you know, we're going to end up for the year and the second half. I mean, interest rates, inflation. I mean, the private credit. I mean, I just want to see the scenario of where, you know, we, you know, climb this wall worry. I mean, where are you at on those subjects?
Well, let's break apart a handful of these things. One, interest rates and oil are going to be sort of tied together, right? You know, if this conflict continues to stay elevated, the inflation risk is going to be elevated. And from that perspective, those two are going to be sort of tied at the hip from a trading viewpoint. And if you look at the overall model and what the bond market is telling us is they are becoming more worried about inflation. No rate cuts are priced in right now. And there is more of a neutrality when you look at the Fed Fund futures models right now, number one. Number two, in terms of private credit and private equity, pull up the charts of Blue Owl, AERS, BlackRock, and all these. Again, I don't want to be negative, but if you look at the longer term daily or weekly charts, there's something here that doesn't make a lot of sense, right? And when every brokerage firm wants to go try to put private equity into individual investors' accounts, you got to look at it and go, huh, that's interesting. So that's a problem from these perspective. But for me right now, I don't have to trade these things. It is a little bit worrisome, but I do not believe at this point that it is something as bad as the great financial crisis for the private equity and private credit. But keep in mind that if oil prices don't come down, interest rates don't come down, most of the private credit out there is floating rate debt, guys. Okay, it's floating rate debt, meaning it will get repriced up and the interest payments will go up if those long end of the curve remains elevated. That will exacerbate the problem. And again, that will now be tied to the hip private credit, specifically with the private, with oil prices and interest rates. It is a very tough dynamic. And we need to see oil prices down materially before the 4th of July, because it's really the 3-month window ahead of the midterms is when people think about how they want to vote. Do you continue to keep the incumbents in, or do you want to see a regime change take place in Washington? And so there's a finite window here for the current administration. That's, Joel, how I think about it all.
Okay.
And how I'm going to trade some of these things specifically. Like right now, for the broader market, trade it as a relief rally is the best way to think about this until proven otherwise. I titled our note this morning that we put out. I titled it, where is this title here? I titled it Guilty Until Proven Otherwise. And that's how I think investors are going to trade this market. This market is going to be guilty until proven otherwise. Yeah. Show me why the uptrend is resumed. Don't guess at it. Let the market tell you. And right now, it's challenging.
Craig Johnson, longtime guest on the show, helping us navigate these markets. Chief Market Technician over there at Piper Sandler. Always a pleasure to have you on, Craig. We'll be dialing you up next month for sure.
Thank you, Joel. Thank you, Dennis.
Thanks, Craig. Awesome stuff.
Let's hit a couple ratings. We haven't done ratings in a little while. Here we go. We're going to start with a Ralph Lauren upgrade, ticker RL, City upgrading to buy. A little color here. I'm looking at the fly. I think the fly for a little color. Citi expects the company to report a Q4 beat and says the year-to-date share sell-off offers a, quote, attractive buying opportunity. The company should see continued momentum in fiscal 2027. Citi thinks Ralph Lauren's efforts to elevate the brand have driven strong performance, while its higher-income consumers should be able to handle the macro volatility. Triple D, why did you want to start with RL today here for our rating segment?
Well, first, it's a bold call because we haven't seen any analysts really making a hell of a lot of calls here lately. And why is that? Because when you're in this type of market environment where it's uncertainty, where it's choppy, where you're in a war environment, you're just seeing analysts hold their notes. If they're ready to come out with a note, they're holding them back until we get into an environment where they feel safe to come out and do that note. It's like the analysts, like we don't consider this, but those analysts' jobs are on the line by making good calls. So when they make a call and it comes out with a note like that, it's like them buying the stock, for their own, even though they're not physically buying the stock. It's like that.
We know that like 70% of ratings around Wall Street from the sell side are buys. So you're going to probably be, if you put out a note, you're probably going to be putting out a buy rating. Are you going to put out a buy rating in this environment?
It's difficult. So as much as you're nervous to like, it's uncertain, I don't know if I want to buy that stock in this environment, the analysts are the same way. I don't want to know if I want to put out that note in this environment.
Totally.
Here. When the environment starts calming down, then those notes, start coming out, because there's a lot of notes in the queue ready to go. Don't kid yourself. But it's like, we don't know where we're heading in this market environment. Just hold that note for a week or two here. Sometimes they work on these notes for months, before they're coming out. Like they're doing heavy research. So, releasing it into a market environment when you got war uncertainties is always scary. Now, Ralph Lauren it's been an unbelievable stock. I mean, you think about, retail, and you think about like, some of these retail stocks just been killed. They're actually selling the clothing though. So when I went back to the necessity trade, not that we're there, I think I'm early for that, but I do think that's going to be a thing in the future. Food, shelter, clothing. I mean, Ralph Lauren is clothing. The P is not crazy. It's 19 times forward earnings. Is it kind of the stock though that the market's going to be like, oh yeah, man, that's what I want to own in my AI environment is Ralph Lauren? I don't know, but there could be some AI efficiencies here too, which are hidden. I don't know what's in the note, but I think there could be some AI efficiencies here too. So I wouldn't just throw it out the window. I'm going to just say a U for my rating with just uncertain. I'm uncertain about this one. I like the bold call. I kind of could see AI efficiencies really helping Ralph Lauren. definitely some automation could come in there, you know,
Yeah.
and help obviously here with RL. Tariffs probably have been an issue here too. I haven't researched Ralph Lauren to see where they make all their clothes, but I'm assuming a lot of it comes from Asia. So those are stuff to think about here. So I'm just going to go with uncertain, and the timing of it's uncertain as well.
I'll go with an H for hogwash. I just,
Ooh.
Well, okay, I gotta hear the color on this one.
Joel's not convinced.
I don't know. I mean, what did you put this more in the category of, you know, higher price points? You know,
Are they? Is Ralph Lauren? Is it that
yeah,
they come down a bit too.
yeah.
It's intended that way. I don't know if it actually
Yeah.
is,
Ralph
but it's
Lauren,
intended that way.
Polo.
There you go.
I just,
80s, your polo shirt. You know,
yeah,
you're
yeah,
going-
with the little
going to play
horsey, and
tennis in my
I
polo.
think I still got a blue one upstairs, maybe.
I think I got a Ralph Lauren shirt.
But I don't have the, you know, maybe in college had the pink one where you flip the collar up, you know, you look really cool. I don't know. Innocent. I mean, it's had a significant decline. I don't know about the market environment. I just think it's a little, you know, I don't know if people are just going to be bolting. I will say it hasn't even got to yesterday's high at 447.68. Of course, we had a little bit of a crazy day yesterday. But you know, if you're going with this one, I would look for follow through it right off the open. And it's not the greatest market day so far. And use yesterday's high as a target. But no, not loving this one.
Just to reiterate something here, Johnny's saying there's no AI in RL. Certainly. But
there could
to
be in the
Dennis-
future, though.
There could be. But like to Dennis's point, just because something doesn't have AI in their product doesn't mean that they're not going to use AI to make their business smoother and more efficient and flatter. I think that's what some people are kind of not realizing here. And I think it's a huge implication for this idea.
This company is ripe for AI efficiency. I think that that's where there could
Probably
be
a lot of
some
like
money to be made.
high paid corporate high end, right?
All of it. Like you're going to see
Right?
AI efficiency go across the board, and it's not good for middle management. It's not good for, you know, some people who probably have highly skilled jobs. You know, is it good for the person in Asia who's putting together, you know, is AI going to be able to do that cheaper? I don't know. Like, is there a way you could bring some of these jobs back to the US through AI? Maybe that's a consideration here
I like
too.
that thought.
I mean, yeah, there's lots to think about with this, you know, with a company like this. But I would say I wouldn't just go as far to say there's no AI in Ralph Lauren. I think there's none right now, but there could be in the future.
Let's sneak one more in here. Joel's got the chart on screen. Nebius, NBIS, catching a new buy rating at Bank of America, $150 price target. By building and running large data centers, Nebius allows companies to train and run AI models without having to invest in their own infrastructure, which represents a, quote, huge opportunity, according to the B of A analyst. With a customer base that includes Microsoft and Meta, the firm believes Nebius is strategically positioned to capture share. Thoughts, guys, on a buy rating on Nebius from B of A?
Love this stock. I've loved it for a long time. I've owned it a couple of times here too. I would be a buyer of dips on this stock. So I think this stock, I think it's going to be companies like this that are going to lead the next bull market here. So I think Nebius, I think it holding up and being as strong as it is in this tape, the relative strength is excellent here too. It got a little overdone from 110 to 130. That's why I said I wouldn't chase it that day. I would wait for a dip. You've got a dip here now. So I think the timing of this buy rating is perfect. I'm going to give them an A.
Woo!
I'm gonna give it an O for okay. Like okay.
It's hard
Yeah,
to please
that's
Joel,
good.
so that's a pretty
Yes,
good from Joel
yes.
too.
Yeah, and it had the nice run, correct? Big contract. I can't remember who that was with, and then they jammed the offering down your throat, right? And then you held up. So I'm just looking at the last 5, days, the trading range. You kind
Sure.
of been stuck, yeah. A little bit of consolidation here. So let's get out of this range. Real good support at 114, and you found sellers over 120 over the last couple of days, but perhaps you're building a base to bust through there.
You guys ready to wrap?
Yeah,
Right.
I think just expect more chop, expect more headline risk, expect more crazy moves. Yeah, So that's where I'm at on this market. I think, it's going to be about buying dips, shorting rips.
Boy, oh boy. I'm just not as optimistic. I think that a lot of that move yesterday, really, we're not seeing much justification of it from what's going on. I think you have a nervous market. I think as Craig put it, but prove otherwise. Path of least resistance is lower. 150 handles off that Globex low from Sunday night. So there's gonna be chop, but I think the sellers are out there, and I think they're ganging up on this market. I wish I could be more optimistic, but not feeling it today. We're already below yesterday's low. To give you a look at guests for the remainder of the week, we'll get some bullish sentiment from Ivan Feinseth tomorrow. Tommy Lackey Jr. comes to the show on Thursday, and see what's up with Tony Pollard from Real Life Trading on Friday.
Nice.
Everyone, have a great day. Back with you tomorrow morning.